Welcome to Chart of the Day Cafe for Thursday, December 17th, 2015. Just going to read our disclaimer quickly. Trading stocks is a high level of risk and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice. Thank you for your patience with that. So huge, big day in the markets yesterday. Oh my gosh, they don't get much bigger. Janet Yellen did, in fact, announce that she was going to raise interest rates by a quarter point. The market reaction was pretty good, and I'm filming this at about 9:20 Thursday morning. The futures are up, so far the market seems okay with it. So we will see. We are still at that very critical area where caution is really advised. So we'll see if we can get through those areas of resistance that we've been talking about. So we always start our videos off with a Russell. We use the Russell as our simple proxy for overall market health, strength, and direction. And as you can see, it's been trading. These are weekly candles in this sideways choppy manner. So we're not going to put any new charts forward until price gets up and over this blue band. And we get more of a discernible trend, something like this, where the 8-day is through the candle and it's ticking up. So far, the candle is ticking down and looking for direction. So no new charts, but we will go over some picks that, should the market continue to show strength, might be interesting. Just as a reminder, S&P at this area of resistance couldn't get through. This is all of 2015. This week's candle is going to be super interesting because it needs, in my mind, to engulf last week's candle to show real commitment in terms of its intention to get through this area of resistance. So the price action in the next few days is going to be super interesting. If it does start to weaken like it did here, the price direction was pretty severe and pretty swift, so you really want to be careful here. Same thing with the Dow. If it starts to slip, you got to be super careful, is what I'm trying to say. Having said that, the sectors that are showing strength are technology. So technology being up and over that area that was resistance, which is now support, and technology so far this week is having an okay week. And the other one is consumer discretionary, same thing. This is support as opposed to resistance. The other one I'll offer up as something to keep an eye on is the RTH, the retail. So 1, 2, 3 tries to get up and over this area of resistance. Nice bullish candle so far for the week. Will that continue? Retail is really important to the economy in the U.S. overall, so should this continue to show strength, that would be kind of interesting. So the charts that we have been putting forward, again, with a lot of caution behind any decision you make. Disney is up and over the blue line. These are all past chart of the day picks. So the value, I've checked these this morning, is still there. Google, up and over the blue line. And that's what we use as our guide. When price is up and over the blue line, good. When it trades below, not interested. The other one that we talked about, Cisco, I wanted to flag for you. I think Cisco looks interesting here, and it's up and over that blue line. So let me just get into Cisco a little bit for you to remind you of the scores. It's trading at, excuse me for a sec, currently trading at $27.24, worth $38.26. Earnings, forecasted earnings growth rate of 9%, PE of 12, dividend yield of 3.08%. That's a nice dividend. Dividend growth rate of 18%. Sales growth in the past year of 4%. So the dividend on Cisco is pretty compelling, and should this market continue higher, that might be one to keep an eye on. The other thing I wanted to say is I'm going to make this the last video before the holidays because everything's getting pretty busy. So I'll resume the videos again after Christmas in the first week of January. So everyone have a great Christmas. I also wanted to say that our Chart of the Day Cafe model portfolio only has one position in it right now. Through all of this chop, it was challenging to, we're in and out and in and out, so it's pretty even. It's just about break even on that portfolio that was started on September 8th. I might add one or two names if this market does show some real strength to monitor over the holidays. If the market does not, and it starts to display some weakness, I would be looking at this ETF that is the inverse of the Russell. So I will swap out of those long positions and look at getting into something like this, not making any suggestions whatsoever, and it's just a paper money for the fun of it model portfolio. But my definition of trending is the 50 over the 100, so the 50 is the blue line. It's in a squeeze right now, so should this start to perk up, I would look to take a position in this for the model portfolio. Again, not making any recommendations whatsoever. And we just have Boeing right now. So as long as Boeing stays up and over that blue line, we're good. So with that, I will leave you. I hope you have a great holiday, and we will resume the videos in January. Thanks.